Okay, this is Accounting 1. We are actually on Chapter 2, Lesson 3. Okay, I've got 1-3 up here because I'm going to continue taking notes on what I took from Chapter 1. You may do the same. If you don't have enough room, you can add another piece of paper into your notebook, however you want to do it. I just think it's easier to have everything together. So, in this one, we talked about transaction number 6 and transaction number 7. Okay, I can't find the page where I actually did my transactions out here. I hope yours did not fall out of your notebook, but I can go ahead and analyze them this way. So transaction number 6, these were about revenue. And remember, revenue was which kind of an account? It's a capital account. So transaction number 6, it says on August the 12th, we received cash from sales of $295. So we know we're going to have cash, which is an asset, and we're going to have sales, which is a capital. Oh, I don't want to write sales. I want to write revenue. Sales and revenue mean the same thing, but our account is actually called revenue. Okay. So I received cash. Is my cash going up or down? My cash is going to go up because I received it. Cash is an asset. Which side am I increasing on? Okay, if you remember, assets are going to increase on the left debit side and decrease on the right credit side. So I received cash, so I'm going to put $295 on the debit side or the left side. Revenue. Revenue is sales, and we sold something, so we're going to increase the amount in our revenue account. And so revenue, which is a capital on the right side of the T, on the right side of the equation, is going to increase on the right side, which is the credit side, and decrease on the left, which is a debit, so it's opposite cash because they're on opposite sides of the equal sign. So this one's going to increase, and so I'm going to put it over here. So I'm just going to put $295. I did not have to use my plus sign anymore. Transaction number 7. This time we sold services on account. Okay, so we sold services on account to Oakdale School. We're going to be using a revenue. So I'm just going to use revenue. And we're going to have an asset in our accounts receivable for Oakdale School. Okay. Oh, I made that the wrong color. My assets I wanted to make blue. Sorry about that. Okay. We sold services on account, so we are increasing our revenue because we sold services. So to increase a revenue, which is a capital, I'm going to increase on the credit side, which is on the right side. So I'm going to put my $350 over here. And I'm going to increase my asset, which is my accounts receivable from Oakdale School, because they owe me money. It's my money. They just haven't given it to me yet. So that's my asset. So that's going to increase. And because it's an asset, it's going to increase on the debit side. So I'm going to put my $350 here. I have a debit and a credit that equal. I can go on to the next transaction. Okay, we're on transaction number 8. And in your book, you can find this on page 40. Okay, transaction number 8 says we are paying cash for rent. And I'm going to go ahead and do number 9 with it. Number 9 is paying cash for the telephone bill. It's not in your book, but it was for chapter 1, so we're going to go ahead and continue with it. So I know that I'm going to need cash, which is an asset. This one also uses cash. And my other two accounts, I'm going to have rent expense, and I'm going to have, I believe telephone bill is a utilities expense, but just to make sure, I'm going to go back to page 3 in the textbook to look at my chart of accounts. Expenses, I have the choice between advertising, insurance, miscellaneous, rent, supplies, and utilities. So I've got rent, telephone bills not listed, but I'm going to put telephone bill under utilities expense. So I'm going to go ahead here and put my rent expense. And I'll go ahead and make this one for my utilities expense. And yes, if you put telephone expense instead of utilities expense, it will be wrong. Okay, just to refresh, let's go ahead and put our debits and credit. Debit is always on the left, credit's always on the right. If you went and watched one of those YouTube videos, I'm sure you have that song stuck in your head now. I would sing it for you, but you don't want to hear me do that. Debit and credit. Okay. An asset, I'm just going to put this, will increase on the debit, decrease on the credit. These are owner's equity type accounts. So they are going to decrease on the debit, increase on the credit for both of them. They're on opposite sides of the equal sign, so their transactions, their pluses and minuses are on opposite sides of their T account. So let's go ahead and analyze this one. Paid cash for rent. We paid cash. We know cash is going down. So I'm going to record it on which side? On the credit side. So I'm just going to put $300 on the credit side. Rent expense. That is going, it's an expense, and it is decreasing our capital. I guess, okay, now's where we're going to get a little trickier. Didn't realize it was right here. Okay, so these are, I'm going to fix what I've done down here. These are both capital accounts, or owner's equity. We know that capital, or that owner's equity should decrease on the debit and increase on the credit. And we are technically doing that. However, we want to keep a running total of how much our expenses are. So we're going to treat expenses differently. They're not going to act the way they should because we want to keep a running total. Yes, owner's equity is going to decrease. But the balance for our expense accounts are going to be different. Okay? So, I actually want, we need to decrease our owner's equity okay. They're going to not act the way they should because we don't want a huge owner's equity capital account. So rent expense, we're keeping a running total. So we're going to change our plus and minus signs. I told you it'd get a little trickier. Rent expenses are actually going to increase as a debit and decrease as a credit. Utilities expense would also increase as a debit and decrease as a credit. And I'll explain this in just a second after we look at the transaction. So we decreased our cash as a credit because we spent cash. But we're increasing the total that we've spent on rent expense. So I'm going to put my $300 on the debit side. Yes, the pluses and minus match what we did with assets. Oops, that should have been in purple. Sorry, I grabbed the wrong pen. So, because we want to know at the end of the year, how much have we spent in rent expense? How much have we spent in utilities expense? So that's why we are putting those here. Okay? We're putting them as an increase in the debit. But they're still decreasing owner's equity because they are a part of owner's equity. They're like a sub, almost like a sub account. Okay. So even though we're keeping a running total and we're increasing the amounts we've spent in expenses, we are still decreasing our owner's equity. And I know this is a little confusing. Just remember, utilities act opposite the way they should. However, I know this is correct because I still have a credit and I still have a debit. Okay. So we are still good on that effect. And this eventually is actually a decrease in owner's equity. So we're fine. So let's go ahead and look at the telephone expense and see if I can clarify anything for you. So here we paid cash for the telephone bill of $40. Okay, we're going to decrease cash. Cash decreases as a credit. So I'm going to put it on the credit side. Again, it's an owner's equity account. So we need to decrease owner's equity, which means it would be a debit in the great big owner's equity account as a decrease. But we've made our own account for utilities. It's still going to be a debit of $40, but we're actually increasing the amount in our utilities expense because this is just a running total. Okay? I know that's clear as mud. If you have questions over that, be sure and ask, and we will talk about this again during class. But utilities act opposite as they should, but you can still come up here and look at the owner's equity account, and they are still going where they need to go, and we still had a credit and a debit. Okay, moving on. Some other cash transactions. This one we're going to receive cash on account. So receive cash, I'm going to draw a little cash here. And it was from Oakdale School, received on account, so that's an accounts payable. It's also an asset. So account payable, Oakdale. T account. We received cash. We're increasing cash. Cash is going to increase as a debit. Zoom that in a little bit for you. Okay. So we're going to put $200 on the debit side. And we need to decrease the amount Oakdale School owes us. So we're going to decrease it on the credit side. So $200 on the right side. Transaction number 11. This was the withdrawal. This was the one where we paid cash to the owner for personal use. So just like an expense, this one's going to act a little crazy. So we know, if I can find a spot to write here, we have cash, and we're going to have owner's equity. Okay, down here we put it under capital, but instead of capital, this was a withdrawal. We put this down here in parentheses. So this time we're going to call it, it's the name of the owner, comma, drawing. And I know that by looking at my chart of accounts, and this is Kim Park. So Kim Park, comma, I'm out of room, drawing. So instead of putting withdrawal, we're going to put Kim Park drawing here. Okay. Assets are going to, this is our debit and our credit. It's going to increase as a debit, decrease as a credit. Kim Park Capital, we have debit and we have credit. Okay. But it's not going to do the way it should. So if I come up here, I know I'm writing over top of things, our owner's equity. Owner's equity, debit, credit. It would normally decrease as a credit, decrease as a debit, increase as a credit. That's what we did here. We are decreasing this. So it would, if we were putting it in the big category like we did in chapter 1, we would have been putting it over here as a credit, right? So let's look at cash. Paid cash. Cash is going down. That's easy. We're going to put it on the credit side, $125. Okay. We would normally be putting this on the debit under owner's equity in Chapter 1, but now it's got its own account. It's still going to be a debit. However, this one's like expense, and we want to keep a running total of how much money she took out of the company. So we're going to increase it as a debit and decrease it as a credit. So I'm going to put my 125 here, okay? It's actually increasing, so whenever we get on into the book and we're actually finding our balances, this is still increasing. However, it is on the debit side, just like it would have been if we were recording it straight into owner's equity. Because we are taking out the value of the business, but we want to keep a running total. Okay, that is the end of Chapter 3, or Section 3. So, this time, there was no vocabulary to look at. Oh. Oops. There was no vocabulary, but you do have 5 audit your understanding questions. Be sure these are answered in your notes. We will be working on work together and on your own and the application problem in class. We are done with the chapter. So your summary, these are the same objectives we talked about at the beginning. You should be able to answer every one of these questions at this point. And then we will be working on the mastery problem and getting ready for our test. So be sure you ask any questions in class. I know this chapter went pretty well. You have to know your debits and credits. You have to be able to classify your accounts. You have to know whether they increase or decrease on the debit or credit side. And then expenses and withdrawals kind of don't follow the rules. So be sure you ask about those if you're having problems. All right. See you later.